UPBOptionMillionaires.com. It is Sunday, April 2nd, 2017. The market outlook. Let's go over some charts, see where the market's headed, where it's been. If you look on Friday, S&P 500 futures down 0.7%. Overall, though, just a boomerang type action. We closed the session pretty much where we started it in early morning hours. Considering where we were on Monday with the gap down, not a bad week. If you look, we had the gap down, recovered those losses. And look, we almost got back to the losses that we saw on Tuesday of last week, the prior week, where we had a nice move to the downside. If you look overall, this market's putting in lower highs, so that's something we have to watch this week. Are we going to break out? If you draw a trend line across, we need to break that trend line to break this downtrend for the market. I know a lot of people are expecting the market to continue to the downside. If you look, the VIX, something we haven't seen in a while, over 15 briefly last Monday when we were gapping down. But again, like we've seen throughout the move, this bull market since the lows in March 2009, that was quickly negated. And we did actually on Friday, we ended up 7% higher on the VIX, but still well off the highs that we saw on Monday. That 12 number is certainly not something indicative of just massive fear in this market. And we continue to trend higher. I know despite the pullbacks, all the headwinds, negative headlines. I mean, look at the quarterly. We ended the quarter on Friday with that little bit of a pullback, but quarterly over the last several years, if you look since the lows of March 2009, this is a quarterly S&P 500 ETF. The spiders chart, I mean, pretty good. I mean, 1, 2, 3, 4. The last 6 quarters have been pretty nice for the market. If you look also on a yearly basis, since the lows of March 2009, look at this. And actually, if you look going back to 1997, look at the years here. 4 years were, hey, not so good. But other than that, I mean, especially since the lows of March 2009, it's been pretty dramatic. That is the trend. I mean, as much as you want to read that this is a market built on unicorns and hot air and gosh, I mean, there's so many different bearish articles that have been written over the years. So many headwinds, Cyprus, Syria. I mean, you can go through it, the debt ceiling, the sequester, just countless excuses to sell this market, and yet just continues to the upside. So let's look at some charts here heading into this week. We had Amazon. Look, last week, with really impressive move. We got up to new all-time record highs on Friday. The momentum, and I was talking about this in the chat room before the open on Friday, momentum was clearly to the upside, got some calls right out of the gate on Friday. It worked out really nice, and you can see momentum clearly here with Amazon. The analysts are getting behind it. Targets up over $1,100, $1,200 a share. So I think this move is going to continue. And this is a stock when it was trading in the 200s. I mean, you just go to any of the blogs out there talking how is this stock trading at $200 a share? Same with Tesla when it was at, $70, $80, $100 a share. And it's these type of stocks, these moves that continue to defy, the overall market, where you have a stock like Netflix. You can go through all the names really that have rallied. Priceline. I mean, look at Priceline, new all-time record high last week. Actually was down on Friday. And actually Fridays have been pretty good for Priceline in 2017, but not this one. But look at this pattern here. The last 4 trading sessions. Nice flagging pattern setting up this week for a possible move higher. A lot of it was Expedia was falling on Friday as well. But again, this pattern looks nice for a breakout on Expedia. Apple, talked about this many moons ago. Let's look at this, also a nice flag. Now, the timing is going to be an issue here with Apple for continued upside, because really the last couple moves it's had to the upside, it's come after weeks of consolidation. And if you look, we had a couple weeks of consolidation here at this 139, 140 level. So if you're trading calls here, you really didn't hit it until this move up just recently to new all-time record highs for Apple. So that's the problem here with Apple. But the good part is with Apple, since it's not moving dramatically every single trading session as we saw back in 2012 before it started pulling back, the options are really inexpensive, as they were for Amazon right out of the gate. So if the market's not expecting a big move, you can capitalize with some calls. Facebook, on the other hand, broke to new all-time record highs. But what concerns me here with Facebook, it's something that I've been talking about for a long time with Facebook. This trend line here, and you see each time it comes down to hit support, we've gotten pretty stretched here for Facebook. I don't know if this means it's going to head into the stratosphere, but I do think, and if you look historically over the last, since the middle of 2013, it's come back to this trend line. It just has. It's almost like a magnet. So at some point, Facebook is going to reset. Maybe it's a negative article, a negative piece. Maybe it falls for no reason at all. And that's going to be the time to get some puts. We'll see right now. Clearly, the trend remains to the upside. It's a weekly chart. But the minute we start to see this roll over, I think it's going to be a pretty lucrative trade back under 130 for Facebook. Not trading yet. Caterpillar also, I continue to think this is going to trade to the downside. You can see it hit long-term trend line resistance. Support here at 87.50. That negative news from the investigation hasn't really hit the stock. Their closing plant, I saw some news come across at the end of this past week. As you remember, actually, if their lows back in 2016 were what marked the lows was massive layoffs. And the minute they were laying off 10,000 plus workers, the stock really hasn't looked back. You can see now that everything's starting to get, hey, great stock, Caterpillar's doing awesome. Now it's starting to pull back here, and we had that investigation. Deere also, if you look, John Deere, new all-time record highs. These two stocks used to at least work a little bit in tandem, but Deere has really broken out to the upside. You can see this kind of a bull flag forming here, though. If we break support, we can see move back down to kiss the former support here at 100 for Deere. Some earnings this week. Yes, I know earnings season really kicks off in a couple weeks, but we do have earnings. PriceSmart, this is the Costco of the emerging markets. If you look here, I think it's going to head down to this 85 level for PriceSmart. That'll be something I'll trade for puts. We also have Bed Bath & Beyond. I'm going to bring up the chart for Best Buy because I always bring this up. You forget a B and you get this chart, Best Buy. Look at this. Who would have thought Best Buy? Everyone's talking about how bad brick and mortar has been. If you pull up charts for Macy's and Target and Kohl's. But look at Best Buy. Unbelievable. Just continues to break out and defy. Look at this, new all-time record high for Best Buy. You bring up a chart like Target, which is broken down. Look at this. This actually looks pretty compelling for continued downside. Target, Kohl's, look at this. Oh, back in the channel, possible move to support here at 31.50. Macy's breaking down. Wow, look at this. Also, let's do, well, of course, JCPenney, what's it trading at? 30 cents? Just being sarcastic there. But again, some of these retail names beaten down. So if you pull up the one with the extra B on it, Bed Bath & Beyond, we're at support here. This is going to be an interesting one. We could possibly see a breakup back into the low 40s here for Bed Bath & Beyond, as it did. I don't know if you recall a couple of earnings reports ago. The earnings report was nasty, and yet the stock had like a squeeze. But then the next week and a half, it gave back all those gains and then some. We could see that happen with here. So this is going to be kind of something you're going to get cautious into, because the earnings report and the reaction to it sometimes is misleading. And what will ultimately happen is that the weeks afterwards, you'll get the real action. But it'll be certainly something to watch for here, especially if the options aren't too expensive. Energy, let's watch Energy XLE. Again, it's coming up to the 70 level. It broke through it. And then look what happened at the last couple trading sessions of this past week. We got back over it. That 70 level, got back over it, above support. There's something to watch for here. The one thing I would bring up is that each time it's come to the 70 level, momentum clearly starts to break. We have not broken that momentum to the negative side here. That will confirm this move, a possible back down to the 49.50 level. I think that's what we hit back at the end of 2015, start of 2016. So that's something to watch for. Once that momentum breaks negatively, that'll be a great trade for downside. Right now, as it stands, we're holding this 70 level. It likes it. It's like a magnet. So until we see that momentum start to turn negative, probably something you just want to trade intraday. Also, you look at the financials. Look at Goldman Sachs. From a long-term perspective, despite the move to the downside this past week, what was it down at $222? It bounced to 230. Still looks compelling here for a move to the upside, as does JP Morgan Chase. Held support here. Still no move into a negative momentum territory. Which also look at the bond market. And also bring that up on a shorter time frame, 5-year weekly chart. You can see we've come up to resistance. We're pulling back. So I think bonds are going to pull back, which implies higher interest rates going to help the banks here. All right, UPBOptionMillionaires.com. So we have the market holding support last week in small caps. They're actually leading the market. The VIX beaten down from the 15 level. We have financials possibly going to recover some of their losses. So I think overall, I think the market's going to continue to grind higher. We're going to recover those losses that we saw 2 Tuesdays ago for the S&P 500 ETF back over to 238 level. And for the S&P 500 futures, we're going to break this lower high pattern and break out to the upside this week. UPBOptionMillionaires.com. I'll see you in the chat room. Everyone have a great rest of the weekend.